I'm here with Cheryl from your Director's Advocate today, and we're going to be talking a bit about what Cheryl does in her business, predominantly around insolvency, small business restructuring.
Well, good morning, Ashley. It's nice to be talking to you. So, Your Director's Advocate is a company that assists small businesses who have solvency issues. So, we primarily work for the director for the small business as opposed to the liquidator who's working for creditors. Um, we we basically want to talk to people once they start to get into trouble, try and work out what the best outcome is for them. Sometimes it might not be a liquidation, it might be a refinance. Sometimes they want to close the business down, but we're trying to get the result that they want as a family. And so then we'll try and work with the professionals that we need to get those results for them. So that might be lawyers, valuers, finance brokers, liquidators, bankruptcy trustees. There's a range of professionals that we work with. And then we'll act sort of as a project manager, a coordinator who coordinates with all of those different people, making sure everybody's on the same page and we're all working towards getting the same result for the director. So that's primarily how we operate.
So, we're seeing a lot of businesses having a lot of trouble, particularly in the construction industry. A lot of businesses not being able to pay their bills. Most of them are going into either administration or liquidation. What are you sort of seeing on your end with the industry side of it? Like, which industries are struggling the most?
I guess for us, most of our clients are in the construction industry. Few hospitality. We're actually seeing a few in the IT industry as well, which is really interesting. Transport, and I think obviously with the fuel crisis that's going on at the moment, we're going to see a lot more of that. Interestingly, um, scaffolding. You know, there's seemed to be we have a lot of clients that we've assisted with business restructures over the years in the scaffolding industry. And so I'm always, conscious. I look at the ASIC lists every day and I've noticed that there's a lot of people in that particular industry as well. I I think it's across the board, to be honest with you. I think that there's some fantastic businesses in every industry, and unfortunately, in every industry, there's some poor managers, there's people who have been caught up in liquidations, not being paid. So we are sort of really seeing everything across the board at the moment.
I do see, going back on the construction side of it, a lot of plumbing industries have also, sort of not doing so great lately. And even home builders, they're definitely, struggling as well.
Yeah. And I think the beauty of a small business restructure, if we just go back to that in Queensland, is that, of course, in the past, there weren't too many options for small businesses in the construction industry, the plumbers, the electricians. It was liquidation or voluntary administration, and they lost their QBCC license. But this small business restructure is one process that they don't lose their QBCC licenses. So it has been very popular amongst the tradies, those small businesses, the plumbers, the electricians, the chippies, the bricklayers, concreting, because their QBCC licenses aren't affected. So it's been fantastic. It's really given them the opportunity for the first time in many years to be able to get their debt under control and keep trading. So that's been fantastic. We're on quite a few Facebook groups where we have a lot of interaction with the tradie wives, the wives of the small business owners, and you can see from the questions that come from there, some of those businesses are in so much pain. It's so hard for them to find someone who can actually help guide them through, that exit strategy or that restructuring strategy, or give them good advice. You would
Yeah.
see that too. Yeah.
Yeah, I do. I see that quite a lot. And I get told that quite a lot as well when I'm talking to people on the phone that, where can they turn to and where should they go? And yeah, it's happening a lot more now.
Yeah. And I think too, and you would see this as well, if somebody rings me I'm probably the fourth or fifth person they've rung, and there's probably another 10 on their list.
Yeah.
And they're getting so much information, and they're sending me, excerpts from ChatGPT and Google, and it's just overwhelming for people. I really do feel sorry for them.
It would become very overwhelming, especially if they're trying to still run their business at the same time, as well as looking up what to do and how to help them get through it. And yeah, it would be very, very hard, especially for families as well. Like you said, a lot of small businesses, like family owned businesses, it can make it very hard in day to day life. So, what is a small business restructure and who is it for?
So, small business restructuring was new legislation that was brought in a few years ago, and primarily it's for small businesses. You've got to be a company to do a small business restructure, or you need to have a trust that's got a company as the trustee of the trust. So, it doesn't work for sole traders. Small companies with debts under $1 million. So, that encompasses a fairly large amount of small businesses, and they're usually mum and dad businesses. Um, and those debts really, if they're under $1 million, it means they have an opportunity to take advantage of the small business restructuring system, which is less formal. It's not a liquidation where a liquidator comes in, takes over the business and shuts it down. It's not a voluntary administration where you lose control of your business for a period of, 35 to 45 days while the administrator takes control. Essentially, the business owner stays in control with the guidance of the small business restructuring practitioner. And, some great results have been achieved through this. There's been in the early days, there was some debt reduction of, 90 to 85 cents in the dollar. These days, debt reduction is probably less, more likely to be in the region of 65, 60, 50 cents in the dollar. But, if a business has got a $500,000 or $600,000 debt, that's a great result. Because also the advantage of this is that once the agreement is reached, there's no interest being accrued on that debt. So, yeah, the small business restructuring process really has been, quite revolutionary for small businesses, particularly with tax debt.
At Ashleigh Global Plus, we deal with a lot of small businesses going through a lot of difficulty with trying to keep up with their cash flow. They're so busy being out bringing in new business that they're not collecting on invoices that they're sending out. I have got a client who is a recruiting agency, and they had a debt that was outstanding for, I think it was about 2 years. And the debt was probably around about the $10,000 mark. And it took a few months for me to really negotiate, try and get payment. There was a lot of back and forth. There were then solicitors involved, and a 2-year-old debt at $10,000 ended up settling for 50%. And our client was absolutely grateful. They were so happy with the outcome. And that really helped their cash flow with their business because they were sitting on this debt for so long. We managed to settle it and everyone was happy in the end.
Actually, don't you think that if that client had got you involved earlier, in my experience, there's often a reason that people aren't paying. Sometimes they're just being pig-headed, but often there's a reason. And you get involved earlier and they say, well, they didn't finish that, or they didn't supply this, or they didn't supply that. It gets supplied and you collect 100% of the debt because, we all know, don't we? The longer that debt goes, the less chance you've got of collecting it. So I think, if we can get you guys involved sooner in the process, then collection's got to be better.
It is. And I do see that a lot. You're so right. Like, the longer it is, there's disputes, there's things that can't be fixed or rectified. And like the sooner you are onto it within, say, 60 or 90 days, it's definitely a lot easier. You're looking at a good 100% of that debt returned, depending on who the who the client is and what they want to see, even if they want to settle. It's definitely a lot easier.
Yeah, yeah, no, totally agree. And I would say that, a lot of these small businesses that we're doing the small business restructures from, when you're getting a history, somewhere there in the background, there's customers that went broke on them, or they couldn't collect the debt. And once again, I think if we'd, so had some intervention a bit earlier, that debt may well have been collectible. And because the tax department,
Yeah.
as you know, often is the last person to get paid because they're the person that's not
Yeah.
banging on the door. So early intervention of debtors collection, I think, is vital.
Yeah, definitely, 100%. So, going back to the small business restructuring, what financial records or documents should a business prepare before starting an SBR?
If we're involved in the process, we actually will sit down with the client and the accountant and give them a list. All the tax returns have to be up to date, all the BAS has to be lodged. And for that to happen, the Xero accounts, My or QuickBooks has to be reconciled. And I'm sure you would see this when you are working with clients. Sometimes it hasn't been reconciled for 12 months. Um, so that's usually a job then for the client to go in there, get everything reconciled up to date, super guarantee statements. There's actually a lot of accounting work that needs to be done, but often the accountants are stymied because quite often the clients don't have their files up to date. So and collection of debtors as well. They don't even have a debtors ledger. That's just bits of paper. So I'm sure that you would see that, and I'm sure the clients that you get involved with, you make sure they keep a good debtors ledger so that it's
Yes.
traceable, I guess.
Yes, yeah. Debtor's ledger and making sure everything's, reconciled is, one of the most, it's priority of, we don't want to chase something that's, say example, it says it's $10,000 on the statement, and then it turns out they've made payments or something, and then it turns out to be, 8,000 or 7,000 outstanding. So having everything up to date definitely helps
Yeah.
our process and would help your process as well.
Right. Well, one of the other things that is vital for small business restructure is that we have to be able to give the small business restructuring practitioner a three-way cash flow. So that's challenging for a lot of people, a three-way cash flow, but it's even more challenging if clients don't know what's outstanding, what the collectibles that are outstanding. If they don't have good collection strategies, then those debtors don't come in time, and that's giving them a really lumpy cash flow. Whereas they've got good collection, then we know that things are coming in the times that they're supposed to, and that really helps providing that cash flow as well.
Terms and conditions is probably one of the most important things that any client should have. In the terms and conditions, you've got payment terms, interest, you might have PPSR. There's a whole list of different things. What do you have that in your process when someone comes to you for an SBR?
Actually, we don't have it in our process for an SBR. We do have it in our process probably for some of the other, liquidation and voluntary administration. But actually, thinking about it, that's probably a good opportunity because this restructuring process is about restructuring the business, not just the debt, but the business. And as you've just alluded to, makes it very difficult to collect if you don't have terms and conditions. And something else I encourage people to do is make sure in their terms and conditions they allow for the cost of collection, because that will often put them off engaging someone like yourselves because it costs us money. Whereas if that can be included in the collection process, that makes a huge difference. So no, I think that's probably something we can think about, because it's certainly something we do for a lot of our other processes, and it's certainly something that we see that people just don't have. They still think remalpa clauses on an invoice are sufficient to collect on.
Yeah, yeah, I do see it a lot with it being on an invoice. It's not something that I like personally. A lot of businesses do still put it on the bottom of their invoicing, but having it in format of terms and conditions, and they're signing off on it saying that they agree to these terms, it definitely helps in the long run. And with having the debt recovery clause in it, which, a lot of people, they do get a little bit put off by it, but it's definitely helpful to have on there so that the client is covering themselves if they do need to send that through to a debt recovery agency like ourselves to recover those costs that are involved in doing that.
I think that a lot of small business owners are too scared to send out those. Once again, they think that it'll put the client off. But I'm just trying to think, because you guys actually have special terms and conditions for people in the construction industry, don't you? You really can help with some of those terms and conditions for them.
Yeah, we can. We do have our lawyers that can help us write up terms and conditions, contracts, and yeah, they will be able to go through all different industries.
Yeah, because obviously, if you are in the position to be able to put a PPSR on a company that you're dealing with, you have a huge advantage. But once again, I think a lot of people are too scared, too nervous, or actually don't even know that the process exists. So that's about all of us in the industry educating them that it's there, that people like, Ashleigh Global Plus have got those documents. But the reality is they save you so much money at the back end. It's worth the small amount that it costs to get them drawn up.
There are a lot that don't, and I say, spend the money, cover yourself now because you're going to save yourself in the
Yeah.
future.
And I would say too that when we're doing a small business restructure, there are a number of creditors, particularly in the construction industry, that have all those personal guarantees, those terms and conditions. And of course, while they, might be included in the small business restructure, they're still getting paid in full because otherwise they're coming after the director personally. So a personal guarantee, PPSR, is very powerful. People often don't realise how powerful it is, if you want to get paid in full. So a small business restructure is great. It's really good for tax debt where there's no personal liability, but often in the construction industry, particularly, as you would know, a lot of the suppliers in the construction industry have very, very good terms and conditions, and they do get
Yeah.
paid in full regardless of the small business restructuring.
Yeah. And you'd be surprised, and you probably see this often, how many people don't actually read the terms and conditions before signing. And I hear it so much. Like, I'm on the phone to people every day, and I say, well, this, you've signed for this, you have added this on, it could be interest, the debt recovery costs, or the personal guarantee clause, or we've, lodged a caveat or anything like that, where I've said, well, you've signed for this. And they say, oh, I didn't read that.
They don't read it. One of the first things we ask all of our clients when they engage our services, now, have you got a list of all of the credit applications that you've signed? Do you have a list of your terms and conditions? Occasionally, people will keep them, but as you say, mostly they sign them, they don't read them, and they have no idea what they've signed. And of course, even during the process of a small business restructure, even though people aren't supposed to, it's supposed to stop all action. Occasionally, you'll get a creditor who puts a caveat on somebody's property, and then that's something that has to be dealt with through the course of that small business restructure. And quite often, it's shock horror from the client because they didn't know they'd signed it. And they're hidden away, they're tiny little clauses. But we really make a point of pointing those out to people and just trying to establish whether or not they have signed any of those. They're just so important when you're starting up a small business.
Yeah, no, they are. They save the business in the long run, that's for sure.
Yeah, yeah. I believe that you and I are both sort of the canary in the coal mine, where we can see the writing on the wall, you can see where things are headed. So you can help we can say to people, you need to be collecting your debtors. Why don't you talk to Ashleigh Global Plus? You can be saying to people, look, I can see your tax debt's getting up here. Maybe you should be talking to someone like your director's advocate. Maybe they can be talking to you. And we start talking to them about, check your mailbox every day. looking for director penalty notices, looking for letters from the ATO. Don't ignore them, because they won't go away. All they're doing, you're kicking the can down the road. So I think this is a great opportunity, Ashleigh, for both of us in what we do, to be able to identify clients who are perhaps, heading on a bit of a downward path, and perhaps reach out to each other when we see somebody in that position, and try and help them to make sure that they, they don't end up in liquidation or in bankruptcy. I think the opportunities are there for both of us.
Yeah, I agree. Well, thanks, Cheryl, for joining us today, and I look forward to working with you in the future.
Thank you. Thanks very much for having me.